On recent memos, you've devoted a lot of time to considering the impact of passive investing on the broader market. You say you don't actually have any opposition to the ETF wrapper itself, as long as people use it for the right reasons.
Right.
What are the right reasons? What are the wrong reasons?
They're good for investing. And I think that if you, and most of them have low fees, which is a good thing. Mm-hmm. And if you want to invest in the kinds of things that the ETF invests in, then I think it's a good vehicle for you. The issue, Scarlett, in my opinion, the main issue is liquidity. I think that people turned to ETFs and away from mutual funds because with a mutual fund you can only trade at the end of the day and at the prices set at the end of the day. With an ETF you can trade anytime. So it's easy to say, oh, it's more liquid. Mm-hmm. It's more flexible. I can do more things. And that should be true, but on the other hand, that's a should. And like I said about high yield bonds are illiquid by nature. Can a fund that invests in high yield bonds be depended on to be more liquid than the bonds that it invests in themselves?
Right.
And I think my easy answer is no, but certainly not all the time. And you know, for the most part, ETFs haven't been tested. And when they are, we'll find out.
Okay, so when we get a correction and eventually a bear market at some point,
right.
Do you think flows will necessarily change? Are we going to see active make a comeback here? What about hedge funds?
Well, it will depend on how they do. You know, if most investors, certainly I think most of the people who use ETFs, certainly most retail investors, are what we call trend followers. Mm-hmm. And they decide what to do today based on what happened yesterday. And of course, yesterday's over, as far as I'm concerned. What they should really do is decide what to do today based on what's going to happen tomorrow. That's a little harder to know than what happened yesterday. But I think that, as I say, if you want to be an investor, I don't encourage trading in ETFs, but short term. But if you want to be a long-term investor, I see no problem.
According to your 13F filings, you don't appear to use ETFs at all in your investing.
Right.
And I know that you buy individual securities. Is there a reason or a moment at which you would consider using ETFs?
I can imagine a use for them. Uh-huh. For example, let's say that you hive off $50 million from your fortune.
No problem.
And you give it to us and you say, I want to be invested in high yield bonds. So we start putting your $50 million to work. But you also say that in the meantime, when you're not fully invested in bonds, I want you to buy ETFs so that I have market exposure while I'm waiting to get invested in bonds. Or during the course of our management of your account, we may have a bond called away. We may have a bond that we want to sell and nothing we want to buy. So some cash could arise mm-hmm. in the account, and you could say, put it in ETFs in the meantime. I don't want to be in cash. So it's not hard to imagine.